Hi, welcome to the Market Alert for Wednesday, the 8th of September 2021. So stocks, bonds, bullion and Bitcoin all drop as the dollar pops, bouncing off the 89%. Look at that in just a moment. Sell all things except Apple, that was the subhead. And this was another interesting article as well. Is anyone willing to call the top of the everything bubble? Can extremes become too extreme to continue higher? We're about to find out. Which brings me on to this, and whilst loading the browser this morning on YouTube, this came up, which is well worth a watch if you want to know what's going on. I've said for a few weeks in the Market Alert, there's something big happening behind the scenes. Something doesn't feel right, and Mike Maloney in this video goes into details about the Fed's balance sheet, the reverse repos, the repos, and also the money supply, and explains in detail where he thinks the issue lies, and I wouldn't disagree with that either. So this has only been up for 6 hours. Well worth a look. If you just type in behind the Fed's curtain, something is big is brewing on or inside of YouTube, and have a look at that. It goes into a lot more detail than I can cover in the Market Alert. It's dedicated to what he believes is going on. One thing I do know, the implied volatility is becoming incredibly quiet. Coiling is the word, and I zoomed in on this as well so that you can see how tiny the implied volatility moves are at the moment, which obviously results in the underlying market not moving much. However, as the late David Kaplan, who I met many years ago out in California, was one of the first brokers that I used. He wrote a book called The Options Advantage and spoke about the implied volatility when it gets to a coiling situation. Then when it gets to these sort of lows, then the underlying market will make an explosive move, and that's what we're starting to see here. And that's why I download this every day, update it all in a spreadsheet, because you can't really get this info anywhere, but it's invaluable. And allows you to sort of preempt what is likely to come down the line. So when the implied volatility is at lows, it's not record lows, we're down at 1133 if I recall, down at this level. We used to go down as low as 7, but post-pandemic the low is 1133. But if you get down prior to the crisis, if we went down to 10 or below, then we saw the market make a significant correction. So for me, this very narrow range is very important. Now, it could be setting up for something there. And given that the Dow was down 260 points last night, is also interesting as well, that we haven't seen a spike in this. Let's just have a look, see if there's any news today. As I said at the beginning of the week, there wasn't an awful lot to be released. 3 p.m. is the earliest today, the job openings, and then at 4 we've got monetary policy report hearings from the UK. That's just as the market, so we finished trading, and 6 we've got a bond auction and a minor celebrity from the Fed. Williams is going to speak there. So let's move on, have a look at what happened yesterday. I say the Dow was down 260 points yesterday, breaking to the downside. Didn't manage to get through the 89% on the upside, whereas it was looking like that may have been a possibility with the market. Just draw this in for you, making that ascending triangle formation. As I say, most of the time the market would break out to the upside, but on this occasion they need to shake out first to bring the market back by the looks of things. So what I would do here to see how much strength this market has got on the upside is to draw the fibs in here and to see how we get on when we get to the 89%, because the 89 is certainly held on the upside thus far, as the showing resistance and the market moving to the downside there. There does appear to be a weakness around at the moment, and you can see this yesterday afternoon. As soon as the Dow opened, we got into the second 30 minutes and it just fell out of bed until it found some support there. In the German DAX, if we go to the daily chart first, you can see that this is still stuck in a sideways range. It's messy and that's an understatement. You can see there's no trend. The market is treading water. And like I say, that comes back to what Mike was saying, Mike Maloney, in his video, because there is something definitely going on behind the scenes, like trying to hold this together. And I also agree with Mike, the longer they keep this going, the better, frankly. And if they want to drop the price of the precious metals more, that's fine as well, because when this goes pear-shaped, to put it politely, it is going to be catastrophic. There's no doubts about that. So keep it going. I don't mind. You can keep it going for as long as you want, or until it falls apart. In the 30 minutes, you can see that the DAX moved lower as the Dow opened in the afternoon. Since found support at yesterday's low, very important area, as you know, bouncing off this at the moment. I haven't got a recording for yesterday's activity, but you can see here they didn't want the market to go down yesterday. We had a signal for a short, and the market just held at the 15,900 level. They brought it back, and then we had a second attempt, and it took a moment or two before the market eventually broke through this, giving back, allowing to recoup the loss of the first one, which was 22 points. And then you can see them buying back in here, just how this works. Slammed the market to the downside, got rid of all of the weak traders. Clues there that they were buying back, and then the market comes back and puts in a double top there before then trading sideways. And in the afternoon, the market had already started to price in the weakness with the pajama traders in New York. It was already heading south and didn't trade off an awful lot when the Dow did open. I mean, you can see it just moved down and then bounced and then just traded sideways as the Dow then continued to move lower. So sort of became disconnected from what the Dow was doing and seemed to have moved lower beforehand. And it's not that big of a move either, to be honest with you. It's only about 80 points compared to what happened in the Dow. And in the metals markets, is something interesting for you. This was sent to me yesterday by a good friend. I wasn't aware of this, but huge squeeze in silver in quiet market as prices jump 11%. An interesting article here that Reuters were actually quoting, as it says there, 27.48, but other sources were still showing 24. Now, I don't know what's gone on here, whether there was they were allowing the market to move up just to see what sort of reaction they would get. But of course, the US was closed at the time. There you can see the spike in the daily chart. I mean, it would have been fantastic if it were to have been allowed and held, but for whatever reason, it wasn't. Whether it's one of those, as they call in the trade, a fat finger, where somebody typed in the wrong thing, which seems highly unlikely, but that's always the excuse that's given. But anyway, as we discovered yesterday, and as I said in the market alert, they're going to use the opportunity to move the market to the downside. And sure enough, that's exactly what they did yesterday. And I wouldn't be surprised if we don't see more of this, because until they're ready to move this market now to the upside, they're going to continue to hammer it to the downside, as we're seeing here. And also at the moment, there seems to be the market moving up in the dollar, coming off the 89% retracement, which again we spoke about in Friday's market alert. Actually, that wouldn't be Friday. Yeah, it's Fridays. No, it wouldn't be Friday. It'd be Mondays. As the market moved back to the upside there. Like I say, it was the first day I was back, wasn't it? We showed you the demand and the market moving up off the 89%. Retracement there, so no surprise. Again, if the dollar's going to be manipulated to the upside, it's going to put downside pressure on the metals, and there's your targets out of the gates as it starts to move back to the upside as well. It just happens to be the better of all the bad currencies that are being devalued at this time. Gold also under pressure yesterday, not as much as silver. Silver's easier to manipulate than gold. And you can see there coming down to just below 62 there to sit at 78% and 89 for yesterday for the gold market there. So yeah, let's see what happens. Actually, I think the dollar index will be coming off the books next week, before the weekend of the 20-year anniversary of September 11th. It'll be interesting to see if anything major happens during that weekend, as many other events have taken place during that sort of important date of the 11th of September. So there we go. That's a roundup of today's events. Like I say, have a look at Mike's video. Mike's video, well worth a look there. A lot of very important and valuable information with regards to what's going on at the Fed at the moment. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.